Hello there, future accountants. I am Reema Dominic from the Department of Professional Accounting and Finance. So today we are going to start our second chapter, which is hire purchase system. So looking into the meaning of hire purchase system, when the goods are sold on credit for which the payment is made by the buyer in installments over a period of time, it is called hire purchase system. It's like a installment system, but is not actually, it does not have the same meaning of installment system. So we look more into the meaning. Hire purchase system refers to the payment for the goods will be made by the buyer in installments. If the buyer pays all the installments, the ownership of the goods will be transferred on the payment of last installment. So this is the one most important difference between installment system and hire purchase system. The ownership of the goods will be transferred only at the time of the payment of last installment. However, if the buyer does not pay for any installment, the goods will be repossessed by the seller and the money paid for earlier installments will be treated as hire charges for using the goods. So, the money paid for all the installments, if it's not able to pay the remaining installments, the money paid earlier will be treated as hire charges. So, under the system, there is hiring of goods happening. Hence, the system is called hire purchase system. The parties, we look into the parties involved in hire purchase system, we can say there will be a supplier, customer, that is a seller and the buyer, and in between them they will have a hire purchase agreement. Hire vendor, hire buyer, in between them there will be a hire purchase agreement. Okay, the important terms relating to hire purchase system is, the first one is, as we mentioned, hire purchaser, who is the buyer of a particular item. Then the hire vendor, who is the seller of a particular item, who sells that item to the hire purchaser. Then the next most important term in hire purchase is the cash price. Cash price refers to the price at which goods are sold under the contract of sale. If we are buying a particular item under contract of sale, the price we have to pay is the cash price. Then next is the most important term, hire purchase price. Hire purchase price refers to the price at which goods are sold under hire purchase system. This will include cash price and interest. If you are buying something under hire purchase system, we have to pay cash price. Along with that, we have to pay interest. So cash price plus interest is the hire purchase price. Okay, then the next term in hire purchase system is installment money. As we said, this is like hire purchase system is like installment system. Installment money is something which is paid in a period intervals. That is installment money. Then moving on, next is the deposit. We all know what is deposit. We call it like down payment, deposit. So deposit is the initial payment the hire purchaser makes at the time of entering into the agreement. That is deposit. Then we can see what is down payment using this picture. The initial payment we makes is the down payment at the time of taking delivery of the goods. Then the balance will be paid as regular fixed installments. Then next term we study in hire purchase system is hire purchase charges. Hire purchase charges is same as interest. The interest we give under hire purchase system, that is referred to as hire purchase charges. Okay, the next very most important term in hire purchase system is the rebate. Rebate is the one thing the hire purchaser can claim from the hire vendor. The hirer can claim rebate from the owner in case he decides to remit the balance of the purchase price in lump sum without continuing the purchase agreement till the last date stipulated. If he is not continuing the agreement till the last date and he is deciding to break the contract and to settle the amount in lump sum, he can claim a rebate from the hire vendor. So for calculating the rebate, we have to follow this formula. The formula for calculating rebate is 2/3 into hire charges into number of installments due, number of installments remaining. that is divided by total number of installments. This is the formula you have to learn, very important formula. Then this is a picture which represents hire purchase transaction. There initially there is deposit, there is an advance, then the principal and interest together is paid as fixed monthly installments. This is a picture which represents a hire purchase transaction. Then moving on towards an important area in hire purchase system, steps in hire purchase system. So in this chapter we are learning asset accrual method, steps as per asset accrual method. So the first step is calculation of interest or cash price. Calculation of interest is the first step in asset accrual method. The second step is depreciation calculation, calculation of depreciation, and the third step is cash price in each installments we have to calculate. So the first we have to calculate interest for each year, then depreciation for each year, then cash price in each installments we have to calculate. Then the next step is we have to record the journal entries in the books of hire purchaser and in the books of hire vendor, and next we have to prepare is the ledger accounts also in the books of hire purchaser and in hire vendor. So let's look into the journal entries as per asset accrual method. So the first we are looking into the book of hire purchaser, journal entries coming in the books of hire purchase. So the first journal entry, when the asset is purchased, there is no journal entry. Why? Because the ownership of the asset is transferred only at the time of the last installment. So at the time of purchasal, there is no need of recording any journal entry in the books of hire purchase. So you have to remember, in the books of hire purchaser, at the time of purchase, there is no entry to be recorded. Then the next thing happening is the payment of down payment. So the down payments journal entry is asset account debted to bank. Something is paid, something is the cash is going out of the hire purchaser, so we have to credit bank, asset account debted to bank. Then the next journal entry is when the installment becomes due, when the installments becomes due. Before payment, we have to show the journal entry for the installment due. So the journal entry for installment due is asset account debtor, interest account debtor to hire vendor account. So straight to that asset account debtor, you have to write the cash price part of installment. You have to write the cash price part of installment. Then interest, you have to write the interest of that particular year, then to hire vendor. That is the journal entry for installment becomes due. Then the next journal entry is when the installment is paid to the hire vendor. So installment is paid, so the journal entry will be hire vendor account debted to bank. Then the next journal entry when the depreciation is charged. Depreciation is charged, so depreciation is a charge, so depreciation is always debited. Depreciation account debted to asset. It is charged on asset, so depreciation account debted to asset. Then when the interest and depreciation is transferred to P&L account, that is the last journal entry, transferring our charges to P&L account. So P&L account will be debited, P&L account debted to interest account to depreciation account. All these are the journal entries coming in the books of hire purchaser under asset accrual method. So we have journal entry for down payment, when the installment becomes due, when the installment is paid, when the depreciation is charged, when the depreciation and interest is transferred to P&L account. Then moving on towards the book of hire vendor, journal entry is coming in the book of hire vendor. The first journal entry will be the sales journal entry. When the item is sold, the journal entry is purchaser account debted to sales. When a sale is happening, sale is always credited, purchaser account debted to sales. Then when the down payment is received by the hire vendor, he is receiving down payment, so bank account debted to hire purchaser account. Bank account, we are receiving something, so bank account will be debited, bank account debted to hire purchaser account. Then the next journal entry in the books of hire vendor is when the interest becomes due, hire purchaser account debted to interest. That is the journal entry for when the interest becomes due, hire purchaser account debted to interest. When the installment is received from the hire purchaser, The journal entry recorded in the books is bank account debted to hire purchaser account. Bank account, when we are receiving something, we have to debit bank account. So, bank account debted to hire purchaser account. Then the last journal entry, the interest account is closed by transfer to P&L account. Here for the hire vendor, interest is the income. So, in the P&L account will be credited. So, interest account debted to P&L account. So, last journal entry, the closing journal entry, transferring the interest to P&L account, interest account debted to P&L account. So, this is all about hire purchase system. Hope you all understood. Thank you for listening.